Hello guys, welcome back to another section. Today I'm going to be talking about the fundamental analysis. On our previous video, we've talked about technical analysis, and we have the three types of analysis, which is the technical analysis, fundamental analysis, and sentimental analysis. And I already showed you guys how to identify your support resistance, how to draw trend line, and so on and so forth, the market structure and all that stuff, which are the technical aspect of trading, right? So right now, before then, I'm going to before the fundamental analysis, I'm going to be showing you something on the charts, not actually the chart, on my board, right? So as you can see, like I said, I've been recording this video before, but I find out that the audio was not there. Alright, this is from the recordings, right? So let me just quickly explain this market structures. Alright, let me quickly explain market structure, right? I already told you how to identify market structure. I already told you guys how to identify market structure, right? So when market is making highs, that means we are in an uptrend, and when the market is making lows, that means we are in a downtrend, right? So right now, market making highs, right? I'm going to be explaining this impulse and correction moves, right? Also known as retracement. The correction move is also known as retracement. So we have impulse move and correction moves, right? Which is, for instance, we are in an uptrend, right? Market making highs. Let's assume market is making highs, higher high, higher low, higher high, higher low, higher low, higher high. All right, you get it. So the direction is up, right? The market is going upward. So the move towards the trend is called the impulse move, while the move against the current trend is called the retracement, right? For instance, we are in an uptrend and the market is making higher highs and higher lows. That means the move towards the uptrend, which is the move towards the uptrend, which is this, right? Which is this is the impulse move. Why this move now going against the trend, the current trend, is called the retracement move, which is also known as the correction move, right? This is the impulse, correction, impulse, correction, impulse. So that's how you know your impulse and correction move. So with the downtrend, right? Impulse, correction, impulse, correction, impulse, correction. All right. So that's that for that. And also we have the supply and demand, right? This is demand area, supply, demand, supply. All right. How do you know supply areas, or why did they call them supply and demand areas? So let's take for instance, or let's take for instance a company launch a particular product, and which they have been doing advert for long, and they just launched that particular product and they are running a promo. So that product goes for 500 naira, right? I use the example 500 naira. So now probably maybe the product the product looks cheap. People are going to rush that particular product, and what will happen? there will be high demand in that product. And probably, for instance, the company is wanting to produce 1000 products every month, right? Now, if the demand is high, that means the supply will be lower. That's what causes price to move higher, right? That's what causes price to go higher. So if the supply is higher than the demand, then that's what moves price downward. That's what makes price to fall. So for instance, that product is 500, right? As you can see right here, this is 500, 600, 700, 800, 900, 1000, right? That product, they just launched that product and they started selling at 500. Now the demand is higher, right? The demand is higher, right? The customers are much and the products are less. Why? Because the demand is higher. They plan to sell they plan to sell they plan to sell 1000 products at a month, but rather they are having more than 1000 customers. So the demand is high and the product is less, which is the supply is less. So at that point now, it has already caused that company to want to move the price from that 500 naira to probably maybe 600 or 700, right? They want to move the price. Now you see the price has gone up, right? So moving the price upward to 700 naira might reduce the demand, right? Then you see now, right now the supply will now be more than the demand, right? Which will cause the company to want to reduce the price downward. The company will want to reduce the price downward. Now you see the price has dropped back to 600 probably. Then maybe people comes back to rush that product again. You see the price goes up again. Then comes down, goes up, comes down. That's how supply and demands work, right? So as you can see, here's the demand, here's the demand, here's the supply. Right? So that's how supply and demands works. Alright, so now I'm going to be heading to the fundamental analysis. Alright, I'm going to be talking about fundamental analysis. So what's fundamental? Like I said, we have the technical analysis, fundamental analysis, and sentimental analysis. So right now, I already talked about technical analysis. So let me explain sentimental analysis. Sentimental analysis is when you are not following your own analysis, rather you are following the the people. Like for instance, if people are buying Bitcoin, like some people are buying Bitcoin, some people are selling Bitcoin, but the the people buying Bitcoin is much than the people selling Bitcoin. For instance, 90% of the people are buying Bitcoin, right? So you want to follow the 90% of those people buying Bitcoin. That's what we call sentimental analysis, right? Because you see people buying, right, and the people buying is much, you want to follow those people buying. All right, so that's what we call sentimental analysis. So right now we'll be talking about the fundamental analysis, introduction to fundamental analysis, right? Definition: fundamental analysis involve evaluating the economic, political, and social factors that affect currency values. It seeks to determine the intrinsic value of currency based on these factors. One, key concept. Two, interest rate. All right. Central banks influence currency's value through interest rates adjustments. Higher interest rate typically attract foreign capital and strengthen the currency. All right. What is fundamental that I'm talking about? Normally, fundamental, it's it's based on a particular country economy, right? The economic of a particular country, that's what affects a particular currency, right? Let's take for instance the United States. During the election, United States election, because of the campaign and the election, you can see during the campaign, Donald Trump was saying the things like how the economy is going to be better when it comes in, right, and other stuff. So as you can see, him coming in, winning the election affects the market, most especially the crypto market. Immediately he won the election, you can see Bitcoin skyrocket, right? Bitcoin skyrocket. So let me show you an example, right? From the day he won the election, there's Bitcoin. I think that day was actually November 5th, right? You're gonna see November 5th. Somewhere here, right? This, I think this is November 5th. As you can see, this is where Bitcoin started to rise up, right? Immediately after Donald Trump won the election, Bitcoin make this move, right? And as you can see, it was a great move. And since then, Bitcoin has been going up. Why? Because he said he was going to make US the center of crypto, right? So that is a good news for the crypto space, right? And that made Bitcoin to gain much value. So that's fundamental. That's how fundamental works, right? That's how fundamental works, right? Economic data releases reports such as GDP, employment figure, inflation rate, and manufacturing indices impact currency values. Example, a better than expected non-farm payroll report in the US can strengthen the US dollar against the currency. All right. So having a good, for instance, having a better than expected news makes in the United States makes the United States dollar strengthen against any other currency USD is paired with. So that's how the fundamental works, right? You can trade in news through uh, uh, fundamental analysis by looking at the news release, right? Economic data release, like such as GDP, employment figures, inflation rates, non-farm payroll, which is NFP, and so on and so forth, right? But I don't trade the news, and I don't advise people to trade the news. So, but it's something you can learn and master it, all right? So that's that for that.